Hello everyone. Hi, welcome to the channel of Wall Street Mojo. Watch the video till the end, and also if you are new to this channel, then you can subscribe us by clicking the bell icon. Friends, today we're going to learn a concept which is known as the tangible assets. As we can see over here, there is an extract given over here of building, machinery, geothermal properties, land, construction in progress. So all of these are tangible assets. Now, what exactly are the tangible assets? So we need to get into the nitty-gritty of the same. Let's try and understand. See, the tangible assets formula, any physical assets owned by the company which can be quantified with the relative ease are usually known as the tangible assets. This can include any kind of physical property alongside, you can say that a piece of land which might be owned by a company, along with any structure built upon it, including the furniture, machinery, equipment housed in it, which is being used to carry out the business operations. Like, we have the data for tangible assets which have been actively used in the operations, and they are expected to benefit the future period of time, the property, plant and equipment. So the tangible asset should be actively used in the production process of the company. Now, what are the list of the tangible assets? See, property, plant, and equipment, that is PPN, are long lived tangible assets which are used in the production of the sale or other assets. And the cost of the PPE includes all the expenditures. That includes, like, the transportation part, you have any insurance related expense, installation expense. All of this will be part of this, and that are necessary to basically acquire and ready them for the use. So if the plant is constructed, all the material, labor costs, overhead, interest costs during the constructions are included in the cost of the property, plant, and equipment. Now, the list of the tangible assets example are something like this. We'll start the first with the property. Now, property includes the land, building, office furniture, and so on and so forth. The next goes around is the plant. Now, plant is the physical space where the workers work or they provide services. We have next as the equipment. This refers basically to your machineries, vehicles, and other tools, equipments that are used to produce. Fourth is your inventory. Right. See, this includes all type of inventory, like your finished goods as well as your WIP, raw material inventory, and so on and so forth. Now, we'll try and understand the recording part of the property, plant, and equipment on the balance. See, you record property and plant and equipment, which is known as your tangible assets, on the balance sheet at their original. You add to this all the cost involved in getting the assets ready for its intended use, like the legal fees that are involved, the transportation cost, then you have to the current location, then necessary for testing and non-recoverable taxes. So you do not record PPE at its market value. Right. The next, what we are going to take in this example, in this discussion, is the examples in terms of companies. Now, see, depending on the type of the companies, this assets may vary, may not make the largest assets amount. So the two tangible assets example are the first ones, the high capex companies, like the oil ones, the oil and gas. We have oil and gas, then we have the real estate. We have the car manufacturing companies having the large percentage of the total assets which have been tied up in their plant, in their equipments, machineries. So therefore, you will find a large amount of the tangible assets on the balance sheet of this kind of industry. And the second over here is the service companies. Now, these are the companies like Microsoft or Infosys that will have far fewer assets. Such companies own a large number of the intangible assets, like the patent, the copyright, and so on and so forth. Now, what is the difference between the tangible assets and the intangible asset? The difference between both of this. See, this is the another type of the assets which can be owned by the business and is classified as the intangible assets or the non-physical assets, which can be difficult to quantify. So this can include like any trademark. We have copyright. Then we have other parts like intellectual property rights of the business, goodwill, brand recognition, and also they are often considered as a part of the intangible assets for which there is no specific measure which can only be evaluated subjectively. Now, it is obvious that how intangible assets, goodwill, differ from such assets in the very manner they manifest, and it must be considered separately for the practical purposes. For instances, like the physical assets are typically vulnerable to the wear and tear. Right. It might be damaged or stolen, and others often liable to any form of losses or reduction in their value as a result of the same. Intangible assets like goodwill are more or less immune to the physical damage in form, but their value could be affected in other ways. Like, for instance, brand recognition or the brand equity of a business could be badly be affected by gaining bad popularity over the spurious, faulty, or damage of the products, which have been produced by the business. So it could be quite difficult to assess the extent of the damage to the brand equity portion, which might be caused due to such an event. That is the most important factor that we need to take into consideration. Now, next is how are these intangible assets been valued? How are these intangible assets been valued? See, the potential of the total cost of the tangible current assets usually includes not only amount which is purchased or as recorded in the relevant invoice as a part of the inventory bought, but it also includes any additional cost incurred due to the transportation, like for its installation and for insurance purpose as well. So the value of the tangible fixed assets will be something like, will go something like this, that, those are the fixed assets that have the value spread over the expected lifespan instead of being accounted for only in the year when they might be purchased. So as a part of their value is being accounted for every year in the accounts of the firm, which is known as what we call as the depreciation. A part of their value is being accounted for every year, and which we call as depreciation here, and which also stands for the monetary worth, which is reduced after a certain period of time. So on the conclusion end, tangible assets form an integral and very important part of the assets owned by the business. They play a critical role in carrying out the business operations effectively. That the way their worth might be calculated might be a matter of a consideration. However, as fixed assets are depreciated over time and depending on the method of depreciation adopted, the figures could vary on one business to another. So then again, such assets have to be separated from the intangible ones, and to be able to evaluate and measure their worth with any amount of accuracy. And basically it's exactly what the tangible assets is all about. Now, having said this, the relevance of the measure associated with the tangible assets, obviously there have been limitation due to the differences in the level of the intangible and the tangible assets for a different industry. Like certain industry tend to have a greater, you can say, amount of the tangible assets or intangible assets like goodwill, and hence a lower number of the NTA, that is the net tangible assets, would not represent the real picture while assessing a company from the asset based perspective. But keeping all these possible uses and the limitations in mind, tangible assets and relative measure can be employed with really good effect. Like, I'll give you an example. The tangible assets are more used in the asset intensive companies, and in the tech companies, there are less tangible assets and there are more intangible assets. So that's it for this particular topic. If you have learned and enjoyed watching this video, please like and comment on this video and subscribe to our channel for the latest updates. Thank you, everyone. Cheers.